Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with some big issues to the fore today for food processors. Firstly, the overnight dairy auction was a bit of a damp squib. Prices in US dollars were down 0.8% and were down 1.5% in New Zealand dollars. It was the whole milk powder price that weighed on this auction, coming in almost 4% lower and bucking the indications from the derivatives market, which thought a small rise was coming. In local currency, we're now level pegging with prices at the beginning of 2017, but we're still 50% higher than this time last year. It was an auction that saw the lowest volumes purchased in just over a year. And there are major political forces at work in the beef market. Firstly, China has re-allowed US beef back into the country, its first access since 2003. And in India, a new ban on the export of buffalo meat will choke off a huge supply of very cheap product onto the international market. Australia and Brazil will be the main beneficiaries, but New Zealand beef will likely get some impact as well. And staying in India, they are having remarkable success in taming inflation. About 4 years ago, it was running at over 10%, but the latest data shows it just 2.2%. One of the key reasons for the change is removing volatility in their food markets. In China, the latest data shows that the heat is going out of their housing markets. Price growth is either moderating or prices are actually falling in some places. In financial markets, the first step is about to be taken to move them away from LIBOR. It will be a slow process, however. Contracts based on LIBOR as a benchmark currently exceed 150 trillion US dollars. In Australia, they've cancelled their El Nino climate watch because the chance of the weather pattern re-emerging soon has evaporated. Ocean temperatures have apparently cooled back to normal ranges. In New York, the US Treasury 10-year yield is lower today at 2.16%, and across the Pacific, the Chinese 10-year government bond yield fell again yesterday and the curve inversion widened, with the 210 variance now at 9 basis points. The price of oil is down more than $1 today and now under $43.50 a barrel, while the Brent benchmark is just under $46. That is now a 7-month low, and the global oversupply shows no sign of ending soon. And the price of gold is lower as well, down another $2 to $1,243 an ounce. But the Kiwi dollar is holding its own and still at 72.4 US cents. On the cross rates, we are higher at 95.6 Aussie cents and 65.1 euro cents. Against the British pound, we're up to 57.4 UK pence, the highest in more than 3 months. The TWI is at 76.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.